to Geared for Growth. I'm your host, Mike Mortlock from MCG Quantity Surveyors. Today, I'm talking to property investing royalty when it comes to the market and, of course, this podcast. I've got the gentleman who was episode 1 and joined us for episode 100, Pete Wargent, and, of course, Cate Bakos, who's been a regular guest on the show and my co-host on the Property Trio podcast with Dave Johnston. Pete and Cate have written a book, The Buy Right Approach to Property Investing, all about mastering the skills to purchase property and invest in property with premium results. I'm interviewing these guys today in lieu of the book. It's in the post on its way, but I wanted to have a chat to them about what readers can expect, the content of the book, some of their observations with their vast experience, and how property investing has changed over the 100 years we've got data on. So Pete and Cate give us an insight into what's in this book and where we can get a copy. This is not a paid promotion. This is just a book I've been very excited about coming out, and I think everyone's going to get a lot out of it. But to talk to us all about that, here's Pete and Cate. Pete Wargent and Cate Bakos, welcome to Geared for Growth.
How cool is this? Two of my favourite property men.
I should say welcome back to Geared for Growth because, of course, Pete, you were episode number 1 and number 100. I don't know where we're at, but we probably have to bookend you somewhere down the track. And obviously, Cate, you've been on the show a number of times. But the motivation for getting you both live together is that you've written a bloody book.
Yeah, Mike, you know what? I should have signed some kind of contract deal or something, being your episode number 1. I should qualify for some kind of revenue stream for promoting Geared for Growth. But I think that was back in the days when we had really dodgy laptop microphones and it probably sounded like we were recording in a lounge room, which we might have been. But gosh, that's a few years under the bridge since we did the first episode.
Well, it's almost 7 years to the day, like within a couple of weeks. Wow. So it's been a long time. I remember, so the motivation for starting Geared for Growth was like, I don't have the time to do a podcast. I don't know how to do it. I don't even have one. So I'm just going to ask 3 industry legends whether they'd come on the show. And if one of them says yes, then I'll have to have a show because you can't say like, come on my show. Oh, I actually haven't got one. And I can't remember who the other 2 people were, but you said straight away, yeah, when do you want to do it? And I'm like, oh no.
So that is exactly what Pete does. And that's how this book came about. And we're talking over pizza and I'm like, we should write a book, Pete. Yeah, sure, no worries. I think Pete said, yeah, cool. And I went home thinking, does the yeah, cool mean, it's a soft decline or like it might happen? And then the next time we caught up, I said it again. And then a week later, Pete's bashed out a few chapters. I've threshed out a skeleton for the book. And next thing we know, we're up to like 40,000 words.
Yeah, when he said, yeah, cool, he basically just then opened a Word document and started.
I do think like an accountant though. So it's very much, right, these are the 10 chapters and these are the 10 points we have to cover in each chapter and then just work through it very methodically, a bit almost like a spreadsheet. But I've had a bit of practice. I've done a few books over the years, but I think when Cate suggested it, and I thought, you know what, we've got a combined half a century of experience here, so we must have some useful insights we can get down into a book. And it took a bit of editing, but we got there in the end.
Well, I haven't read it as yet, but I know that the property market in Australia and property investors at large will be beneficiaries of that in a really big way. Of course, Pete, you've written a number of books before. Cate, you wrote a book quite some time ago. What was kind of the motivation for a bit of a collab and talk us through the sort of structure of the book?
Well, in the past, when I'd noticed something at the coalface and written a Sunday blog, and Pete, bless him, he sometimes reads my Sunday blogs and I read his daily blog and we can put our heads together when there's something going on at the coalface and Pete's got the theory to describe it. He'll explain it and send me a chart or say, oh, right, well, that's cool. I saw this in the data and, you're experiencing it at the coalface. So we've always had that synergy and I've chatted to Pete over pizza. I talk about pizza because that's what we do when he comes down to Melbourne. We go to a laneway and eat pizza. And Pete's gone about building wealth a little bit differently to me, obviously through property, but it just goes to show there's no one silver bullet strategy. There's lots of different ways to do it. And we've always marveled at that. So I knew that we'd have already that dynamic where I could talk about a case study and Pete could explain it with data and history. I also knew that we could both tell a good story about how to build real wealth through property and retire young, which, that's one thing that we've both got in common. If we want to, we can. But lastly, I thought that our different language would give readers a really nice dual flavour, because the book is very much he said, she said. And Pete and I talk and write differently. He's got global experience, he's got an accounting degree and lots of financial qualifications behind him. And I've gone about things a bit of a different way. I didn't have all of that. I had a chemistry degree and then pretty much hit the ground running once I got my real estate license. So, between the two of us, two very different flavours and one really cool story.
Yeah, I hadn't thought of it that way, Kate, but actually, as you said, I think that's true. I've got very much sort of a macro view of the world, and it's almost a top-down approach. I almost start with global economy, Aussie economy, and then what are the states doing and the cities, and it's very much a sort of an economics-driven view of the world, whereas you've been right there at the coalface doing property for, a decade and a half, I guess, in buyer's agency type roles. And I often say, when I'm trying to really find out what's going on in the property market, the people I speak to are the mortgage brokers and buyer's agents, because they're the people, the brokers see what's coming in terms of pre-approvals and who's coming for loans, and the buyer's agents see what's actually happening at the auctions and open homes. I think sometimes, the chief economist view of the world top down, it's useful from a macro perspective, but sometimes you sort of really need to drill down and see what's also happening in a bit more of a nuanced local level. And that's where the synergy comes in the book. Kate brings the book to life, I guess, with lots of case studies and real world examples. And that's what really sets the book apart from a lot of the others that are out there.
Oh, that's a nice way of explaining it, Pete. I often think of what the economists are saying and what's really happening is a little bit like space travel. The sun's rays are hitting us now, but they've been traveling for a long, long time. There's that really huge lag effect in space, but in the property world, it's usually somewhere between 2 and 3 months. Whatever's really going on, I've had people absolutely can me for my commentary on what's happening and what we can expect to see in the data, because I'm experiencing it. I know that there's such a lag effect. It won't break until the sales hit and then the data gets distilled and then the economists come out saying, oh, we're seeing recovery and blah blah blah.
Well, you guys are always great together, as evidenced by our budget night special. So we did budget night not that long ago, and Pete had a year off at the Big Banana on holidays, but he's done a number of other ones before. And
he dialed in while he was in the queue for the rides.
He couldn't stay away. He's a sucker for punishment. Anything to do with finance and economics, you can't take him away. But I think people will have witnessed the interplay between your kind of different. I guess you've got different tradecraft, different backgrounds, and able to bring it together in a way that kind of makes it very meaningful in both, as you say, a macro view and a Kate, you always love to say about what's happening about the coalface, because you're literally seeing it. And you guys have quite a lot of runs on the boards for selecting locations as well. I know, Pete, you were talking about Geelong when there was all doom and gloom when they were shutting down the manufacturing. You jumped into, what was that little place? I always forget the name, New Farm or Newstead. I get them mixed up.
New Farm in Brisbane. I think we must have had a breakfast there years ago.
We did. I think actually that's the first place that we met. And you do probably have an equity claim on Geared for Growth, but I think I actually introduced you guys as well. So if there's any book royalties, we'll call it even. And Kate, you've been very instrumental in picking some of the regions in and around Victoria as well, the Bendigos and the Ballarats, and very gifted with your timing. Because I haven't read the book, this is probably the worst book interview ever, because I haven't got a copy of it yet. But what can people expect? Are they going to get a broad understanding of how the world works from a Pete Wargent's brain sort of view? Is it sort of guiding them into hot spotting? Give us a bit of a rundown. Give us the secret herbs and spices.
The Geared for Growth Property Investing podcast is presented by our business, MCG Quantity Surveyors. If you're an investor or a property professional looking to get the best tax depreciation deductions for yourself or your clients, please get in touch with us at mcgqs.com.au. It's our mission to help as many property investors as we can to maximise their claims and maximise their property education as well.
Shall I go first, Kate?
Yeah, you go.
Well, I think these are the key themes of if I had to distill what the buy right approach is. So, firstly, compound growth is something you read about in a lot of books, but for a good reason. It's the most important force in finance and investing. And I think one of the analogies we talk about, or one of the stories, I mean, I guess it's a bit cliche, but Warren Buffett had a net worth of 3 billion US at the age of 65, which for sure is a lot of money. But if he'd retired at 65, you never would have heard of him. 3 billion in global sort of net worth terms, it actually isn't going to move the needle really. But his net worth today is approaching 150 billion US. And that's because he's been compounding his wealth for 8 decades. So it's quite a crazy thought to think that after the age of 65, you could increase your net worth by 50 times. But that's really the power of compounding. And a lot of the best results come later on. So as a result of that, a lot of what we talk about in the book is buying quality assets, quality, not quantity, long-term focus. Obviously, we talk a bit about the juxtaposition between buying established property, which you can add value to, versus buying new, which can sometimes come with its own risks, as you know. And I think as well, we talk about proven performance and the concept of how success leaves clues. I think we've got a century of data out there. There's lots of books that have been written about real estate and strategies and ideas that have some of them come and go, like fads and mining towns and things like that. But we often sort of look at some of the things that have really worked consistently over the decades. And then Cate brings that to life she's got a case study or a story for every point that we're making throughout the book. So I guess, what have I missed there, Cate? That's a kind of an overview.
It is great. That's the strategic side of it. And Pete and I have talked about our past mistakes and success stories. We've also, peppered in some stories about people we've either worked with or known or, heard about. But I've also been very clear about the stuff we say no to. So it's not just success stories. There is a framework there and some really tactical sections to our chapters as well. I talk in depth about the different types of negotiations and negotiating the negotiating. So in other words, preparing the agent for how you'd like the negotiation to be run from their side of the fence, because agents can play a really huge role in how they deal with a competitive buying or bidding situation. If it's not auction, then there's no rules. So you've got to work out with the agent what you want the rules to be so that it's very clear and sometimes, advantageous for you. But getting off track, we talk about the types of properties that we avoid and why. So there's a lot of theory in there that's really easy to apply. And we also help people work out what their strategy is, because a strategy can vary. A successful strategy can be varied, and it all comes down to how you retire your debt, when you retire your debt, what sort of cash flows that you've got, what your risk appetite is. And so from Pete's strategic advice around working out what your own personal strategy is, all the way through to my tactical advice, how to avoid, bad minefields and things that can bring you undone, there's a lot of gold in there. But what it isn't is a magic silver bullet with just, one particular hot tip that lets you, you read books about certain facets of real estate that might be uncomfortable or unknown. There's none of that. This stuff is all very, very common knowledge.
I was going to say, that's disappointing, because I think a lot of people kind of want that like magic. Oh, all you got to do is buy property, subdivide and build a granny flat, and then you'll be rich overnight. Or, you got to buy these kind of fixer ups, do a cheap cosmetic renovation and then revalue and then keep washing the equity through. Is it fair to say that the kind of the best property advice in broad terms that applies to all markets is actually probably quite boring?
Yeah, it's all about patience. Just, set your strategy, believe in it, cross-check it, get good advice, and then just wait. As Pete said about Warren Buffett, we've borrowed a chart from Stuart Weems, and it's a really fascinating chart because it shows 3 decades in a row. So you buy the property at, whatever growth rate it is and whatever purchase price it is. The moral of the story is in the first decade, it gives you 19% of 30 years worth of growth. And then in the second decade, it's 30% of that 3 years worth of growth. And in the last decade, it's over half. So as Pete said, if you can hold it all the way to the end, I know if you whacked another decade on the end of that 30-year lifespan, you'd make considerably more again. It's just about timing and patience.
I think one of
Well,
the sorry, Mike,
Go ahead,
to interrupt. I was just going to say that I think one of the themes that we talk about is that property, it's not really like the stock market where you might be making stacks of decisions, buying and selling regularly. You're going to make fewer decisions, but the ones you make could be much more important. And as we say in the book, a few good property decisions can literally change the course of your life. And there's lots of different ways you can do it, but really you just need to do whatever it takes to get started. And another point that we make is that in one sense, it's not actually that hard to be above average at property investing because most people in the market actually aren't trying. Most people in the market are just home buyers buying and selling. So as an investor, you do have a potential edge there. And as Kate said, if you look at the long-term returns from property, and we've got 100 years of figures that we can look at, and the returns are very, very similar to the stock market. If you go back decade after decade, I think quite often when people have success in their career, or if they grow a business and sell the business, the wealth gets circled back into land prices and real estate. The same with sports stars. The highest paid sports stars end up buying land and property. And people might always say that the future capital growth may be lower, but then most likely will be the increase in cost of living and interest rates as well, since inflation targeting. So, I think, well, Kate summed it up very well, but there's, just a couple of extra points there from me.
Yeah, I love that. And I'm interested in what's maybe different today that is a contrast from some of those, previous 90 decades. Lending is much more restrictive than we've seen in the past. There's a lot of people that kind of build businesses or write books around 30 properties in 30 years or 20 before 20 or 100 before, puberty, this sort of stuff. Are there any things that kind of you don't really apply today for investors, do you think?
It's a very, very good question. And I've heard a lot of people.
The lending environment, definitely. Yeah, I think
it's tighter.
So Australia introduced inflation targeting in 1993. Now, you might say, well, in the last couple of years, we haven't really done very well at hitting the inflation target. But on average, over the medium term, we should see inflation of about 2.5%. Now, I guess a skeptic might say the way governments and central banks are treating the money supply, the cost of living, the real cost of living might go up more quickly. But I guess overall, we'd expect a neutral interest rate in the future to be considerably lower than what we would have seen in the 1980s or early 90s, for example. So I think there's a few things like that, and particularly the lending environment. These days, for most people, the amount of debt that they can carry is capped. It's a multiple of your income, effectively. So if that's going to be the case, then you need to make sure that every dollar of investment that you're carrying is working as hard for you as possible. And that goes back to the point that we made right at the beginning on focusing on quality, because if you're going to place fewer bets, you need to place them on high probability events.
Yeah, that just dictates that you've got to get these right, and that's, I guess, where the book comes in with targeting, and then of course there's the micro stuff like the negotiation, which is what you're doing probably all day today, Kate. Yeah. I'm wondering with the right now at the moment, if you were taking the pulse of the property investment kind of zeitgeist, this is getting very grandiose, but there's some worrying things kind of going on from my view. There's some markets like over the western side of the country where, in our own data, we're seeing swathes of people pile into that. We're seeing, open homes from real estate agents having, 60 groups and worrying things about people kind of diving into a real gold rush where there's a fairly strong argument to say that the sentiment does not necessarily match what's going on, or the data is not the driver, it's more the gold rush mentality.
Do you know what, though, Mike? I'm just getting deja vu with all of this, and I'm showing my age. Gosh, you can tell I'm turning 50. I remember this happening in Perth 20 years ago.
Right.
Same old. All the magazines. We had online forums then. You asked Pete what's changed, in past decades versus now. And Pete talked about the economic things that have changed, the conditions that have led to lending where it is now. We had data at our fingertips in a very different way back then. we used to buy those API magazines and go to the back of the book and have a look at all of the yields and the columns, because we didn't have internet, or we didn't have what we've got now. So, it's come a long, long way, but people pouncing on and all talking about places like Perth, none of that's changed.
I think, some of the specifics in markets and economics and demographics will always change. So in the last 4 years, the working from home phenomenon, that's a change, and it's a structural shift. I don't think we'll go back to full-time work, 5 days in the office, but there's some things that never change, and human nature is something that never changes. If you look at the most optimistic periods, it's usually before a crash, and the cycle goes on. But yeah, you're right. At the moment, I was just in Western Australia for a week, and something like half of properties are selling before the first open home. It's just as Kate said, it's a rerun of cycles past. But I don't think that will ever change, really. Human nature is partly what drives the cycles.
I guess, in referencing to your point about lending being a little bit tighter, I guess the concern is that you can't afford to make that many wrong moves anymore, because the banks are going to sort of cap you. Look, it's interesting to see that, as you say, human nature, it doesn't change. In terms of the property investment kind of fundamentals and metrics, we've talked about compounding, Kate's talked about negotiation. Does the book kind of cover the types of locations or guidance for finding these areas, and the types of properties that match the demographics and the demand that is specific to that location?
Yes, absolutely. Yeah, so I think, in terms of fundamentals, one of the oldest cliches in real estate, location. One of the others, land appreciates, buildings depreciate. So we talk about the land to asset ratio. This is quite an extensive part of the book which talks about gentrification and how to pick the bridesmaid suburbs, or the suburbs that are going to experience gentrification. And Kate's obviously good friends with the property professor, Peter Kalizos, and we go through some of the points that he's identified in terms of data and research that can help you to identify those areas. So, Kate actually adds a lot of first-hand experience, really, of how to spot those locations and the types of properties that you need to look at, right down to the real detailed level as well.
But no silver bullet, Kate.
No, that's exactly right. And there shouldn't be one, because everybody's strategy has to be different.
Yeah, and that's evidenced by you guys as well, with Pete diversifying. I remember reading your books about investing in index funds. Obviously, you're a property guy as well, and Kate, you're diversifying with locations, resi, commercial, all that sort of stuff. So I can't wait to read the thing. This is probably the worst book review ever. I'm doing it kind of in reverse. I'm getting a teaser. It's like one of those read it for me things where you get the book synopsis, and some of the authors say, oh well, you don't want to do that because then people won't buy it. I'm more interested in buying it now. So for people that are wanting to get a copy of it, what's the easiest way to do that?
All good bookstores, as they say. So get down to your local Dimex, or you can buy online at Amazon, or from our publisher, Major Street. The airport stores will have it stocked this week. So pretty much anywhere you can buy books, you can find a copy.
Beautiful. I love when Sean McAuliffe says it's in all good bookstores, and even that awful one in Launceston. But yeah, go to the airport, go to Amazon. I think we've lost Kate's audio, but guys, thank you very much, and congratulations on putting that book together. I'm sure it's going to be a roaring success, and can't wait to see what you guys do together next.
Always a pleasure. Thanks, Mike, and on behalf of Kate as well, thanks very much.
It's a pleasure. Cheers.